Hey everybody, it is Rebecca at Revenue. I'm super excited to join you today to talk about use and occupancy. This is our second in a series of online webinars for 2026. And today we're talking about use and occupancy tax. I already told the room that I think I'm the most excited person about use and occupancy tax in the city. It's pretty interesting, and I hope that you get a lot of value out of this session today. Put your comments in the chat. We will do our best to monitor it. I am joined today by a number of super awesome revenue employees. Bruno Sosa, who is the supervisor for the technical tax staff. Christinda Martin, who's our co-director of taxpayer services. Kelly Beatrice, she's our systems training manager. Kelly is going to be giving us a demo of the tax center while, so you can kind of see what it looks like. And also Christian Crespo is my partner in crime, director of communications and outreach. He will be monitoring the chat and making sure that we stay on track. And I am excited because the goal is that we demystify the use and occupancy tax. I think we've had some new conversations about it. Some things have happened with it in the last year. And it's important that everybody understands what is happening and what they need to do, what their rights and responsibilities are. So, okay, here we go. Let's talk about use and occupancy. So just to start off, what is this tax? I mean, at the heart of it, it's a pretty simple tax to understand. Essentially, if you have a property and you're using it for a business operation or business use, then it's subject to a 1.21% tax on the assessed value of the property, but only on the portion of the property that's being used for business activity. So we're going to definitely get into what some of that means. This is the tax that is paid for monthly. 100% of this tax goes to the school district of Philadelphia. So I know folks sometimes like to grumble about having to pay taxes, but rest assured, this goes directly to support the schools and the kids of Philadelphia. So there are times when you might not pay this tax. So for example, when the property is vacant or when it's being rented by a nonprofit, and you also don't pay on the portions of the property that are common, like the lobby or the stairwell of the building. So that's kind of use and occupancy in a nutshell. The big important news that you should understand is that in 2025, we had to make the difficult decision to no longer offer a huge exemption, which basically resulted in a $2,000 reduction of your bill annually. This is the change that occurred because of a legal challenge to the policy. And so that means that if you're a UNO taxpayer, this month, January of 2026, you will see that your use and occupancy bill has gone up. We're going to talk more about that. So pretty simple, right? Great. My work here is done. I know you still have probably lots of questions. So joining me this morning is a bunch of guests. Joining me this morning right now is Bruno Sosa, who is the supervisor of our technical tax team. And he and I are going to go through a few different scenarios that I think is going to help, that we can help viewers fully understand some of the nuances of the tax.
Thank you, Rebecca. Glad to be here.
Awesome. Okay, welcome to the show. So like I said, I'm going to throw some scenarios out at you, and you're going to kind of tell me how UNO is going to work in this scenario. So let's start with something that we hear about a lot, something really common. How do we tax a building that is mixed use? So let's give the example, a 4-story building with retail on the ground floor and residential on the upper 3 floors. How will that work?
So this is actually a pretty common scenario, mixed use properties. And the first step that we need to do is we need to determine which part of the building is being used for commercial purposes and which part of the building is residential, as you mentioned in your example. So in this particular example, as you mentioned, the ground floor is used for commercial and the upper 3 floors are residential. So to make this simple and not overcomplicate things, we'll say that, each floor is identically the same. And so if that's the case, the property would just only be subject to the use and occupancy tax on the ground floor. Because residential properties are not subject to UNO, the other three floors would not be subject to UNO. So in a very broad example, if we were to say you have one building that is worth or is assessed at $500,000, when you multiply it by the UNO rate, it's approximately $6,050 per year. When you divide that by 12 and we pay it monthly, it is about $504 monthly. And so when you're looking at that monthly payment, that means only one-fourth of it will be subject to the tax, and the other three-fourths of it is exempt because it's residential. So that $504 monthly payment or tax bill is just $126.
That's great. So, what are some of the other scenarios when you might not pay the tax?
So, as scenarios that you may not pay the tax, is going to depend on the facts and circumstances. So, if you are rented, the property is being rented to a nonprofit, it would not be subject to use and occupancy for the area that the nonprofit is not occupying. And also, if the property is vacant. So, if the property is vacant, then that would also not be subject to the use and occupancy tax.
Ooh, okay. So can we talk about the difference between vacant and closed? For example, like, there's a seasonal business that like I don't know, an ice cream stand or something like that. What happens then?
So it's important to understand that vacant essentially means what it is, vacant, nothing inside the property. It's not being used. It's four walls and a roof. Nothing's in there. If you have property or equipment or anything within the property, and using your example is actually a really good one, an ice cream stand. So typically with an ice cream stand, you would have the ice cream stand operating springtime to about fall, right? And
Hmm.
then generally most ice cream stands will close in the wintertime. But when they close, they leave their equipment within the building. They're not open because no one's really buying ice cream in the wintertime. So in that particular scenario, because the ice cream shop still has their equipment within the building, they would be subject to UNO all year round. Because they can, if they wanted to, they could open in a day during the winter time. It doesn't, they still have their equipment, they're ready
Right.
to go. They're just closed because of the circumstances that they're in. So that's, I think, a good way of looking at vacant and closed.
Okay. If you could open tomorrow, all your equipment's still in there, you're considered occupying the space. If it's really gone, there's nothing in there, you could turn around as the landlord and rent it tomorrow. That's vacant.
That's correct. Yes.
Okay. Let's get a little bit more complicated. Um, so first of all, for viewers, you should always work with a tax professional to talk about your individual and unique situation. So we're providing some examples like just for illustrative purposes, but again, like your situation is going to be unique, your building's going to be unique. We're providing examples that are super easy, like easy quarter slices. It might be that one parcel or one part of your property is one size and another part is a different size. So you want to work with somebody professional. But okay, let's start with the next one, which is what do we do about a religious organization or a nonprofit that's using part of the property for a for-profit business? So let's say, I don't know, like a religious organization that runs a for-profit daycare on the property.
Okay. So regarding that scenario, if you have a religious organization that's running a daycare on the property, then the portion of the building that's being used for daycare would be subject to the use and occupancy tax. And that's because the religious organization is using that part of the building for purposes other than their religious activity. It's a daycare that they're running. So because of that, they would not be exempt on that portion of the building. The other areas of the building that's being used for religious purposes, that would still continue to be exempt from the use and occupancy tax. Only the portion that's the daycare would be subject to the use and occupancy tax.
Okay, Bruno, I'm going to throw you a curveball that was in the chat. What do we do for a residential daycare home? Like for like I'd say elderly people, is it my understanding that it really depends on is that a for-profit enterprise versus a nonprofit residential home, like a nursing home or something?
So a nursing home, presumably this is not a house that's being used for as a nursing home essentially.
Right.
It's a dedicated building that's a nursing home. Yeah, that's a little bit more complicated because you're going to have to break that down and determine what type of business it is that's running. Is it a nonprofit? Is it a for-profit? What is exactly happening inside the nursing home? That's a little bit more nuanced, and that's kind of what makes it a little difficult because facts and circumstances really change the answer, right? Which is why the department always says work with a tax professional,
Right.
because you don't want to pay tax when you don't have to pay tax. You're not legally required to pay the tax, and vice versa. You don't want to miss out paying on the tax when you're legally required to pay that tax. So, I mean, in regards to the nursing home, it's a little bit more nuanced because, again, it'll depend if that is considered the person's residential area. Is it a transitional type of place where it's
Oh,
just
wow. Yeah.
rehabilitation and, it's not their permanent residence? So in regards to that, it's a little bit more complicated, and we would need a little bit more information on exactly how the property is being used to be able to give that answer. But the department's always available if you want to reach out with all the facts and circumstances. We can, always look at those type of questions.
That's a great segue, Bruno, that if you have complicated questions like this, you can send those to revenue tax advisors at phila.gov. Like that's what the role of that email box does all day long is to answer these more nuanced, complicated questions, but you need to be prepared to provide all of the facts. And it's a great example of how like one little change is going to completely change the situation or change how you are taxed. I have a Oh, I have a couple of more scenarios that I want to run through with you, Bruno. One, um, let's stick with this like nonprofit that's kind of that's sort of doing its nonprofit, or let's say it's a religious organization and they're doing their thing, but they happen to be located close to the stadiums in South Philly, and occasionally they open up their parking lot to sell parking spaces to fans who are going to the game. What happens in those situations?
So in that particular case, if the nonprofit is opening their lot and allowing this, spectators of, the sport to go park their cars in their lot, that would mean that the nonprofit is engaging in business other than the nonprofit. Because of that reason, the nonprofit would be subject to use an occupancy tax on the parking lot because they're using it for purposes other than their nonprofit business. And then a more interesting thing as well is, in addition to the use and occupancy tax, Philadelphia does have a separate tax for parking. So if you do have a parking business and you're receiving, a fee for renting out that parking spot, there is a parking tax that, the parking lot operator would need to collect from the person utilizing that space. So that's a separate tax that you would have to file for and collect.
So it gets complicated quick. So again, reach out to us if you have questions on it. And then, okay, I think our final scenario for today, this is a big one, uh, especially in the age of home offices. Our home offices subject to use and occupancy. Um, what now that everyone's working from home, how do we treat this?
So again, Facts and circumstances, right? That's the story of my life is facts and circumstances. With home offices, you have to realize that the law has requirements for home offices. The law states that you must use that space dedicated as a home office strictly for your business. That area cannot be used for anything else. So if you're using, let's say, a spare bedroom that you're not using, during the week because it's just a spare bedroom and you're, operating your business out of that bedroom, and on like a weekend you invite your family member or your friend over and they happen to sleep in your home office, well, that's not considered a home office at that point. You're using that for other purposes than what a home office actually is. The same if you're working out of your kitchen or your living room or your dining room table. Like if you're operating your business out of your kitchen, clearly you're not using the kitchen just for your business, right? You're using your kitchen to, cook your dinner or, make food or store food and so forth. So that also would not qualify for home office. So if it's not a dedicated home office, then it would not be subject to use and occupancy tax. But if it does meet the definition of home office, then it would be subject to the use and occupancy tax because it is it's a area that's being used for business purposes.
So what you're saying is when you're talking about the law, what you mean is that they like the rules for defining a home office that are set by the IRS essentially are so you could potentially claim that as a deduction against your federal taxes personally, right? So the IRS sets out such specific rules about what defines a home office. Like it has to have a door. It can only be used just for the business use, right? Like that's kind of what you mean when you say the law sets out those parameters.
Correct, exactly. It's exactly how you're supposed to use that space within your building. It's no different than your car. If you're writing off, your car for business use, you can't use your car to go to the supermarket and then write that off or go shopping or go out with friends and use that as an expense. So, in order to take these type of expenses, there are certain rules that you have to meet, which again is the reason why we always recommend you work with a tax professional, because this is very important to know if it actually qualifies as subject to tax, and you don't want to be able to have to pay use and occupancy tax if you're working out of your kitchen and you're not subject to use and occupancy tax.
Right. So if it doesn't meet the IRS definition of a home office, it's not subject to use and occupancy, essentially.
That
That's the bottom line.
that's correct. Yes.
Okay, I want to get back to landlords and help like any landlords who are on the call. What do you do if your tenant paying isn't paying the rent? What do you do when the landlords will typically collect the use and occupancy, they're collecting it from their tenant and then they remit it on behalf of the tenant. They have the account. What happens if the tenant isn't paying?
So what you're describing here is what's called an agency tax. An agency tax means that the landlord themselves are not paying the tax. The tenant, because the tenant is using the property and occupying that space, the tenant is responsible for the tax. But since the landlord owns the building, the landlord has to collect the use and occupancy tax from the tenant and then remit that use and occupancy tax to the city. So obviously, if the landlord is not responsible for it, the landlord can't control if the tenant pays the tax or doesn't pay the tax. The landlord can only do what he can do within the parameters. So if the tenant does not pay the tax and they're responsible for the tax, the landlord is responsible to file what's called a UO3, which is essentially a notification to the city saying, hey, I have a tenant that's, responsible for paying this tax. They did not pay the tax. I could not collect it. And so this essentially sets or gives the landlord the opportunity to provide the city with the information of the tenant so that the city can hold the tenant responsible to pay the tax and not the landlord. It is one important thing that I have to stress is that it is extremely important that the tenant or the landlord file this UO3, which is this notification, timely. And that's due every 25th of the month. Because what happens is if they miss that deadline, now that responsibility can shift to the landlord because the landlord did not make a timely notification to the city. So it's very important that the landlord stay on top of this and file timely so that they don't be held responsible or for any of the tax that their tenant doesn't pay.
Okay, so just to recap, because it's such important information, you as the landlord, you remit the tax on behalf of your tenant, and as kind of as that service, you can receive a 1% discount only if you file and pay online or file and pay uh, on time. But if your tenant isn't paying you, you need to let us know before the due date. You need to file a UO3 before the 25th of the month, and then that will shift the responsibility to the tenant from there.
Yes, that's correct, and that's actually one other point that I didn't mention as you mentioned. The tenant does so for the tenant collecting that tax and remitting that tax. There's a 1% discount on that tax that the landlord gets to keep for having to do this collection from the tenant and remitting and filing the tax return on behalf of the tenant. And as you mentioned, they do have to have that filed by the 25th of each month to get that 1% discount. So again, it boils down to making sure that the landlord doesn't miss these deadlines. So one, they can take advantage of the discount, and two, not have any responsibility for any payments that the tenant has missed.
Thank you. This is so helpful. It's a ton of information. So I'm glad that we're recording it and people can refer back to it later. Thank you so much. And we will definitely be reaching out in the future if we have more questions.
Sounds good, Rebecca. Thank you.
Okay, so we just talked a lot through a bunch of scenarios, but the big thing is, what does this kind of mean for you? Um, I know that many folks, many property owners in the city may have received a letter in the mail from us saying that they're now responsible for use and occupancy. And there's confusion about whether or not use and occupancy is a new tax. It's not, it's always been a tax. What has changed is that we no longer have that exemption. And so there are a number of properties who always would have fallen below the exemption and never had to have pay you to would never have had to pay UNO. However, here we are. The other thing that has happened is that we received updated data from the Office of Property Assessment. This is like use and classification data that allows us to open use and occupancy accounts for properties that should be paying the tax. So in 2025, we opened more than 5,000 use and occupancy tax accounts. We sent letters to all those owners. For some of them, this will be the first month that folks have to pay. So the thing is, if you disagree with your classification of your property and received one of those letters, you need to reach out to the OPA and make sure that the use and classification of your property is correct. If your house was at one time commercial, or excuse me, your property was at one time commercial and now it's 100% residential, you have to let OPA know that, or you have to just file with us monthly and say, nope, it's 100%. It's 100% residential. It's fully exempt. We have to receive that data from the OPA. You should have gotten full instructions and the letter that you received from us. And I think we kind of talked about this exemption. So prior, there would have been a $2,000 annual reduction to your bill, but you're going to see this now. You're going to see it now, starting now, January 2026, that an increase to your maximum tax. So kind of to talk through what this actually looks like for a return or how to figure out your liability or to think through what your liability is, I am bringing on Christinda Martin, who is the Director of Taxpayer Services. Crescenda, are you there?
I am here. Thank you, everyone. Hello, everyone.
Awesome. So you joined us last month. You were awesome. I'm super excited to have you back to the show. Thank you so much for joining us.
Thank you for inviting me.
Can we start? Let's go back for a second. Can we start really quickly? Do people really have to pay this every month?
They do have to pay it every month. Yes.
And like, is that, why is that? Is that because, I don't know, your situation might change? Why
So,
would people have to pay monthly?
so if you have a commercial property, let's just take that for example. If you have a commercial property, and like Bruno said, if you still have equipment in there, but it's like let's say if it's not being operated during that time, you are still responsible for paying that tax. Let's say if it's closed, then no, you wouldn't be responsible. But things can change from month to month. So that's exactly why you have to pay the tax if your
Right, like,
equipment is still there and you're responsible for that tax.
or if they move out and, starting in June, you have a vacant space and like, the tax is going to change that month, right?
Yes, the
Um,
tax will change that month.
are there times when a person might not have to pay monthly?
There are times when a person may not have to pay monthly, and that may be if your building is mixed use and you have residential units, or that may be because you have non-taxable exempt status, meaning you may be a 501(c)(3 or nonprofit.
What about annual, like there are times when you can file and pay in one shot for the whole year.
Mhm.
When
Yes.
how does that happen? How do you become an annual filer?
So in order to be an annual filer, the city has to invite you. So 12 years, I'm sorry, 12 months prior to becoming an annual filer, your returns had to be filed and paid timely. You cannot have had any exemptions or any vacancies in the property, and that's 12 months prior to becoming an annual filer, and the city invites you.
Okay. So just to recap, there are times when, like, every year in December, we take a look at all of the UNO taxpayers from the prior year and we figure out who paid on time every month, who didn't have any vacancies, who had the exact same bill every month. And then we will invite you, we will alert you through the tax center that you are now
Yes.
eligible to
Yes,
pay, like, in one annual fee.
correct. And that would
Right.
be by
So
January 25th.
if you don't see that notification in December, your property
You are a monthly filer.
was not eligible. Okay.
Right.
Okay. Once you have filed and paid, can you schedule a payment?
You can schedule a payment to pay.
Okay.
Go ahead.
No.
Did
So,
you have
like,
another question?
so if you file on the 15th, you are
So if I
allowed to
file on the
schedule
15th,
it
if
for
I
the
file my
20th.
return on the 15th, I can schedule a payment for the 20th or the 25th. But yes, you can schedule a payment to be made.
Okay, great. So it's my understanding that it's a fairly simple form, right? But we still want to, like, kind of demystify what goes into this calculation. Um,
Mhm.
So I know that we put together a few examples and you're going to walk us through them. Can you tell us what exactly do we mean by max tax?
So the max tax for the month would be the assessed value of the property times the tax rate. So let's say if we have a $500,000 assessment for a property, you multiply that by the tax rate, which is 1.21%, and you would get $6,050 as your yearly max tax. So that's what you would pay yearly if you were invited. However, if you are a monthly filer, we would break the number, the $6,050 down, we would divide that by 12. So when you divide the 12 into 6,050, you get $504 a month as your monthly max tax.
Okay. And we have kind of an example. And I know that we're going to actually do a demo of the form and filing on the live, like, kind of on a website, but just for folks to see it in a form, this is kind of what it looks like. So for the example, like, that you just gave, let's assume that
Yeah.
3 units are residential. What happens now?
So you see where it says assessed value, that would be the assessed value of the property. And it has the max tax for the period. So that is because we times the 500,000 times 1.21%. We got 6,054. And of course, again, you are not an annual filer. So we had to break that $6,050 down a little bit more by 12. So 12 divided into $6,050 is $504. So that's how you get your monthly max tax for the period.
And then if 3 of the 4 units are residential,
So
we've
with
got
3
this
of the 4,
line. Yeah.
right. So we would break the 504 down a little bit more. So you would divide it, you would divide, is it 3 units or is it 4 units?
It's 4 units.
Okay, so you would divide it by 4, the 504 by 4, and that would bring you to 126-ish, I think. So it's 126. So
Yep.
it's $126 for the max tax per unit. However, because 3 are exempted, because they are residential, you would times the 3 times the 126, which is the monthly max tax.
So you're basically reporting to us that $378 of that 504 is not taxable.
Is non-taxable. Only the
All right.
126 for the unit that is commercial.
All right, well, let's assume that all 4 units in that $500,000 building are commercial, right? If they're all commercial,
Right. Mhm.
then, but let's say you've got 1 is vacant, what does that look like?
So let's say if all 4 are commercial, you would then again divide the 504 by 4 and again get 126. But if you have 1 that's vacant, you would, because we have a max tax of 126 per unit per month, and we only have 1 unit that's vacant, it would be $126 for your vacant amount.
Okay, we had a really good question in the chat.
Okay.
So are we just dividing it by 4 because that's the number of units? The answer is, in this case, we are assuming that every unit is the same size, but it is divided by square footage. So if you have a unit that is half of the square footage, then you kind of have to do the math that way. Just for simplicity's sake, for these examples, we're assuming that each of those units is exactly the same square footage. But you are right. That is the right way to think it through. Like each unit may be different sizes, and you'll have to know what percentage, right? If you've got 1,000 square foot building, I know that's tiny, but like 1,000 square foot and 1 unit is 500 and the other 250 square feet each, then the math is going to be different.
Right. It's all simple if it's the same size. However, like you said, it's not if it's not.
So, all right, we already talked about the discount for landlords, so I don't think we need to get back into it, but essentially landlords, you get a 1% discount as you remit on behalf of your tenants. However, there's some caveats there, right? Do you want to go through the caveats, Kristen?
So this is like, I think I want to emphasize it like Bruno did. If you are a landlord and if you are a property owner and you operate a business out of the property, then you do not qualify for the 1% discount. Only the tenants qualify for the 1% discount, and it must be paid if filed in a timely manner, meaning on or before the 25th of each month.
Okay.
I think that's the most important thing we want to stress about landlords.
If you operate your own business in there, you don't get the discount on that, right?
You do not get the discount.
Okay. And then also everything's kind of in the whole dollar, right? That's the other thing to just keep in mind. Keep it easy. It's round up or down the whole dollar.
Yes.
Okay. Can we talk more? I know Bruno mentioned it. Can we talk more about the use and occupancy tenant or UOT or UO3 account?
So this, the UOT account is for tenants who pay late. Let's say if a landlord and a tenant have terms of agreement that the tenant would remit their payment on or before the 15th, and they did not get the payment from the tenant that month on or before the 15th, then the landlord has the right to file what's called the UO3 or the UOT. against the tenant so that they can take the liability off of themselves and place it on the tenant.
But you, as the landlord, you need to know, like, what is your tenant's EIN or social security number? Like, you need to have that information. So, you need to have the
Yes.
name of their business and their tax ID number.
You should have that going into the contract, into a lease that you, because they shouldn't be operating a business out of your property without the proper documentation. So they should have all of that up front. So if they have a commercial activity license, if they have, all of their business income and receipts tax account, or depending upon what their entity type is, they should have all of that set up in their lease prior to running anything. Everything should be clear and straight before they even get to this.
Yeah. Okay. This is really, really helpful. And now that we've kind of had a little bit of like the discussion about what it is that we're talking about, I'm gonna bring on Kelly Beatrice. Thank you so much, Crescinda, for all of this
Thank you.
information. As always, it's a pleasure to talk to you. Kelly, you're gonna talk about that UO3, right? You're gonna talk about the UO3. You're gonna talk about what this looks like in practice for taxpayers.
Yes, I am. I am going to be demoing what it would look like filing a UOL and the UO3 form on our Philadelphia Tax Center. Just to note, I am in a testing environment, so any of the data you see here is fake and has been created by myself. So that is why it is able to be recorded and any of this information can be shared. So here I am. I've been logged into the Philadelphia Tax Center and I'm on my summary page. If I scroll down, I'm going to look for the Use and Occupancy Landlord Tax Panel. In this panel, you'll see two links: make a payment or file, view, or amend returns. To file the return, I'm going to go ahead and click this. I'm going to go ahead and select this link. On this page, you'll see a list of the returns available to you to file online. You'll notice in the status column where it says return filed, this lets you know that you did already file this period. This submitted means that it's already been submitted to revenue, but is being processed. And any status that is blank means that we did not receive a return. So for this demo, I'm going to go ahead and file the January 31st, 2026 period return. So I'll go ahead and select File Now. This window shows you the taxpayer information that's registered with the Revenue Department and also just displays the period that this return is for. I'll select Next to continue. And this is the piece where it does ask you, are you reporting delinquent tenants? If you are, you would go ahead and select Yes, and then press Next to continue. And that's when we're going to be able to provide the information about the tenants. So here's where I'm going to select Add a Record. And this is where
Kelly, this is you just demonstrating that if you had the situation where you have a tenant who isn't paying you, that's where you would add information about that tenant.
Yes. And if you didn't and you select no, the next window will bring you right into the return. But I'm going to demonstrate adding a tenant that is delinquent. So I'm just going to press previous. So that is one thing you'll notice. You can always press previous to go back to any screens, or on the status bar here, I could also click to go back to that original page. So I'm going to continue and I'm going to select yes, and then I'll press next. And now I'm going to add a record. So I'm going to type in and enter in this information, Social Security. And then I'll enter in the amount that they are delinquent of the unpaid tax. And so I'm just picking 3,000 and now I press add. And here you can see we have the record. And if I needed to add an additional one, I can select add record and continue adding. Then I'll press next to continue. And here we are where you can then enter any of these amounts wherever it's not grayed out. Any of these fields are editable. You'll notice any of the gray are not. When I press next on this next page, here's where you will actually see the delinquent tenant amount that I had added on the UO3. Getting this amount here can only be done on that UO3 form. So if you did file, if I was to go in and file the December 31st, 2025 return now, that UO3 question wouldn't even be asked because I'm filing past the deadline. So once you enter in any information on these two lines, you can then press next. And then here's the payment methods you have as an option. You have e-check, credit, debit card, or pay later. I'm going to select this pay later for this demo because Rebecca and Crescinda, you touched on this earlier about not pay, about postmarking or make a pending payment. So I'm going to go ahead and select pay later, and then I'll show you how you can do that. If I did select e-check, which I'll just do that quickly, you will be asked to confirm the amount you're paying. Here, because of my account, I already have my bank account registered with the revenue department, so I could use that to pay, or I could use a new payment method and add that there. And the same would be with credit cards, just to show. You would be putting in, you have to confirm your amount there. And again, this is fake data. So any bank information, don't worry, it's not real. But here I'm going to choose pay later and go next. This is just doing a confirmation of a review of the amount that is saying it's due for this period, any interest and penalty, and then the total due. And then once I press submit, here's a confirmation page, which you can always print for your records. If not, you can press OK. And now we're back on this screen. Here is where I'm going to choose make a payment. And this is where I can now make a payment for the future. So if I wanted to do a current balance, so if I was paying off that full amount we just saw on the previous screen, I can click that. If I was paying for a specific period, you could choose this, and that's when you would have filing periods to choose from, or make a payment for another amount. So if I didn't want to pay that full amount at this time, if I was using two forms of payment methods, maybe I would want to make a specific, amount. I can do that as well. But I'm just going to make a payment for my current balance. Once I press next, this is where I can choose e-check or credit or debit card. I'll just do e-check. And then this is where I'm going to confirm the amount. So 107.30 cents. And then this payment date. This is where I want to make, I would want to future date it. So if I wanted to come out specifically on the 25th, I can select that. And now this is going to be set for a future date. And then we can continue on. And this just shows you as a record that you have requested for January 25th date compared to today, the amount and the tax account it's going to. And now I'm going to hit submit. Unless there's any questions before I continue. Yes, Rebecca.
I do have a quick question. So
Mhm.
just to confirm, like if if you're in the filing the return and you say, I'm going to pay it right now, I'm doing it right now, I want to take care of this, then you can do that right through there. But if
Yes.
you say, I want to pay it later, then you have to go in separately to schedule that payment, right? You have to
Yes.
go up to basically back to the dashboard of that tax type and
Yeah.
schedule the payment from there.
Yes, right after you press OK, it'll take you back to the page we were on right here, and you can select make a payment. If say you forgot and didn't do it at this time, once you log in, you can always come back down and just select make a payment right here also. And it will be the same thing because any of this time you can then choose a future date. So once I get back in.
And it seems like that gives you a lot of options to, like you said, like to pay a particular period, to pay a particular amount. Like
Mhm.
that seems to give the taxpayer a lot more, if they had to, past due balances, they could pay the whole thing, a lot more options on what to do, what they want to do with it.
Yes.
Great. This is really helpful. Thank you so much.
You're welcome. I'm going to go ahead and stop sharing and I'll let you take it back. Thanks, Rebecca.
Okay. We have a great discussion in the chat. I want to thank everybody for their questions. The kind of presentation portion of the webinar is finished, but I want to make us available for any questions. Please feel free to drop those in the chat. And then for all of you in the future online, thank you for participating and thank you for watching this demo. And again, if you have other ideas for topics that you would like us to cover, we are happy to explore that. Somebody has asked me about SIT. Are there other tax types that we should go into in depth? We are all ears. We are We will listen to all ideas. And if you enjoyed this, please let us know. And if you have ideas for how we can improve it, we want to hear that too. So thank you so much. I think we can probably stop recording, and then we will take any, Christian and I can kind of stay on for a split second and answer any of these questions. Oh, Bruno, I hope you're still here. Does the ice cream stand in winter policy apply to a business that closes for renovations? Their stuff is still there, so are they taxable? That's a great question.
Yeah.
So there is something in the regulations in regards to renovations. If you want to send that over to revenue tax advisors, we can take a look at the actual situation. If there are renovations that are occurring on the property, and it'll depend if if there's business equipment still on there or has it been removed and so forth. So we recommend you send an email over to revenue tax advisors, and we can get that sorted out for you and give you an answer on that.
And I'm going to make a plug though. The regulations for UNO are really interesting, and they do have very detailed examples and mathematical examples. So if you're having trouble sleeping one night, I would totally recommend pulling up the regulations for use and occupancy. You can find that at phila.gov/revenue, and underneath the forms and or underneath the service page for use and occupancy, you can reach the regulations. Is there anything else we can answer while folks are here on the call? I know we're getting close to the top of the hour. I'm really glad that we did this, and I am hopeful that this was helpful. I am not seeing anything else in the chat. And well, you know how to reach us. revenue@phila.gov for account level questions, and revenue tax advisors at phila.gov for those specific like taxability, very specific scenario questions. We're happy to work through those. Okay. All right. We're going to stop recording. Thank you so much. We'll see you next time.